प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the headlines. Market sees smart bounce back ahead of crucial Fed Reserve meeting. Sensex snaps 5-day losing run, rises 367 points higher. Nifty above 17,250, led by autos and financials. Maruti jumps 7% in trade, post inline numbers. Q3 revenue beats estimates. Automaker says there is no lack of demand. However, profit down almost 50% due to semiconductor shortage. Sources tell Business Today TV the government is considering relief measures for MSME sector. Centre may extend ECLGS scheme by 6 months. Later on the show, we get you a power-packed panel on Market Outlook 2022 and what Dalal Street expects from the budget this year. After carnage yesterday, markets bounced back to snap the 5-day losing streak. After a volatile session, Sensex ended over 360 points higher to close around the 58,000 mark, just shy of it. Nifty shut shop above 17,250. While there was a low-level buying seen across stocks in trade today, traders are keenly eyeing the 2-day Fed policy review starting later in the day. Gains in financials, auto stocks aiding the recovery in headline indices. After a better-than-expected performance in Q3, Maruti was the top Nifty gainer, rallying over 7%. Nifty Bank snapped the 8-day losing streak. Axis Bank, IndusInd Bank, SBI, some of the top gainers in trade. While all sectoral indices recovered, Nifty IT was the only loser. Wipro, Tech Mahindra, Titan, Bajaj Finserv and Ultratech Cement, some of the top laggards. On the other hand, after the crash yesterday, Zomato surged 20% from the day's low, while markets clawed back into the green. As per analysts, excessive volatility is likely to continue for a few more days until clarity emerges from the Fed meeting. India's largest passenger vehicle manufacturer, Maruti, reported a sharp drop in profit from a year ago. While net profit was down almost 48%, both profit and revenue beat street estimates. A global chip shortage slowed production and high material costs squeezed margins. Though total revenue fell about 1%, the car maker hopes to increase production in the fourth quarter. It won't reach full capacity. Even with that, the stock zoomed in trade, hitting a 40-month high after a better-than-expected performance this quarter. Bandhan Bank in focus, the stock jumping over 4% in trade after the private lender returned to profitability in the December quarter. The bank expects growth momentum to be robust in Q4 and sees a further improvement in asset quality. I had a chat with MD and CEO Chandrasekhar Ghosh. Listen in.
In our business, of course, is a very good improvement has come to the last quarter. There is two factors we find out on that. Monsoon was in a very good. Okay. And the ground level people's business have been returned back. And they are already communicate to us what is over from their level. And because of consumer demand have been increases in the rural and semi-urban areas more, and the people also return back to the business. And so that the credit demand also increasing gradually, which shows that our credit growth has come in the 10% in the last quarter. And simultaneously also deposit growth has come 19% year on year. And continuing our main plan on that, the retail is 85% and 46% CASA. So all these parameters of the business in reflected from the customer feedback. And bigger customer feedback reflected in the collection efficiency, which has come to this, the total bank is a 90% to 93%. But if I come to specific, which is our major portfolio in a EEB vertical, And that vertical has been seen that the collection efficiency has come from 86% to 92%, which is a 6% increase. But if we see that without PA and restructure, we find out on that this collection efficiency has come the 92% to 97%. So all of these parameters showing on that it is not in the customer feedback when we made, but customer also showing their interest to repay the money on this. Okay. Another one point I mentioned about it is that those are NPA customers. They are also started to pay. This quarter, 66% of NPA customer are paying. Even also restructured customer, those are not eligible to pay. We have given the moratorium, but this period they are voluntarily paying 61% of customers. So all these parameters showing on that the pandemic is over, that now they are returned back to the new business, and there is a credit demand and collection efficiency improving, and the gross NPA will be future going down.
Sources tell Business Today TV that the government is considering few relief measures for MSMEs due to the third wave of COVID-19. The Modi government is considering extending the timeline of its 4.5 lakh crore emergency credit line guarantee scheme by 6 months until September 22. ECLG was announced as one of the key schemes and components of the 20 trillion rupee economic stimulus package in 2020 by Finance Minister Nirmala Sitharaman. My colleague Karishma Sudani brings us more on this. Karishma, when can we expect the government to make this decision? How big a boost will it be for the MSME sector?
Well, Abba, we're picking up that this has to be a post-budget announcement if it's going to be merely an extension. Sources are telling me that an extension is on the cards. In fact, a 6-month extension of the emergency credit line guarantee scheme is something that the government has been, of course, considering as per sources. Besides this, we're also picking up that a probable budget announcement could include some tweaking with the provisions of this scheme in order to allow a more and a wider scope for MSMEs. We know that MSME and SME sector has been the most distressed sector as per the new COVID waves, and the different kind of relief measures that have come in for these have been very helpful, and an extension on cards will definitely help the sector out of this situation.
All right, Karishma, thanks so much for joining us with that. The chairperson of Parliamentary Standing Committee on Finance, Jayant Sinha, in an exclusive conversation with Udayan Mukherjee, says that we can expect a pacey, investment-driven and all-inclusive union budget to be announced by the Finance Minister on the 1st of February.
We want India's growth coming out of a once-in-a-century COVID pandemic to be definitely close to double digits this year, and then to continue forward at a robust 6, 7, 8% a year. So the speed of the recovery is, of course, very important. The nature of the recovery, and we would like it to be investment-driven. Certainly, consumption will continue to play an important role in our economy, but investment is key. And that's why you'll see the government really emphasizing capital expenditure, emphasizing private sector investment, because investment really is the foundation for growth going forward. The recovery is fast, that the recovery is investment driven, and that the benefits of the recovery go to everyone, because we are stressing the high multiplier aspects of what can be done at this stage.
Watch the full interaction on businesstoday.in and Business Today YouTube. How do you use digital media in a hygienic way? How to make technology work for you instead of you working for it? Software tycoon and Infosys co-founder Nandan Nilekani answers these questions in his latest book, The Art of Bitfulness, in an exclusive conversation with Siddharth Zarabi.
While this whole thing was so demanding, both of us had independently developed ways and means to use digital in a hygienic way, in a way that we don't get overwhelmed. And though we had very different details, the conceptually it was the same. And that's when it hit us to create a book which will sort of tell people that, look, technology is here to stay, but how do you make it work for you instead of you working for it? And that's what led to this book, Siddharth.
And here's what else is making news. As many as 9 trade and industry leaders have been conferred Padma Awards this year. Google CEO Sundar Pichai, vaccine maker Cyrus Poonawalla of the Serum Institute, Microsoft boss Satya Nadella, Tata Sons chairman N. Chandrasekaran, and the husband-wife duo of Krishna Ella and Suchitra Ella of Bharat Biotech. Another 4 awards, the Padma Shri, have been given to leaders of trade and industry from India and overseas. Less than a week and counting for the union budget to be presented in Parliament. And the past week has been a bad one for markets. The Sensex losing about 4,000 points in just 6 days. We catch up with market veterans to understand what the budget holds for markets this time around. Listen in as BTTV's global business editor Udayan Mukherjee discusses some of these talking points with Rashesh Shah, Debashish Basu and Nilesh Shah.
Should the market have any expectations this time around? Because, the budget is a big media event. I mean, people like us make a big song and dance about it. But is it likely to be a stock market event this time around?
I think, like every year, I think what the finance minister says in the budget affects the mood and the sentiment and the expectations. I think, fortunately, currently investors are in a good mood. I think I think everybody is very upbeat, in spite of the new variant and the fact that COVID is not over. I think people are looking. They are looking beyond it. Investors are looking beyond this. So I think the mood is upbeat. The only thing that would be there is no upsetting of the apple cart. So I think as long as there is no real downside, and I think people are looking at action from the government and the pronouncement from the government to get the investment cycle kickstarted. So if you ask me as an economic watcher, I would like to see government step up on spending. I think fortunately the Indian government has got room to spend. They have not used up the stimulus in the last 2 years of COVID in a big way. So I think if the government indicates that they're going to spend, it will increase the optimism that is already there.
What do you think, Debashish? Because it is now quite established that this is, as everybody calls it, a K-shaped recovery. The bottom of the pyramid is hurting. The top seems to be doing quite well by all measures. Is it fair to expect a lot from a corporate or from a stock market perspective this time around then?
Well, the single biggest event, according to me, of the last 2 years happened somewhere in the middle of the year. Middle of the financial year, which is when we got a huge tax cut. So budget really had nothing to do. If you really take last 5, 7, 8 years of a series of events that have happened, that is the number one thing that completely changed the character of the profit and loss and the balance sheet of first the profit and loss and eventually the balance sheet of Indian companies. And it came at the worst possible time when the GDP growth rate for that quarter was just 4.2%. And that is the inflated figure, that is the recomputed GDP. In terms of the old GDP, it is still 2% lower. So it's the worst kind of a situation when you got the tax cut. So first of all, I don't think there is any correlation between what the corporate sector wants to see, likes to see, gets to see, really, and what the budget measures are. Year after year, there is this huge interest. There are tons of memorandum which goes to the government, lots of demands, all industry associations have their own list. Market has its own very, very narrowly focused thing, which is tax cut and capital gains and dividend tax and STT, and that's about it. They can't see beyond that, essentially. And then little wider perspective, which is what the corporate should be getting. But the government does what it wants to do. There are different themes in each year, but then the internal measures of any of these don't match up with the themes or what the government subsequently does through the course of the financial year. And finally, what actually events transpire, how corporates react, the external events, the international events, all that really are far, far removed from not only what the budget expectations are, but what the actual budget measures are. So I would really not put too much of weight in it.
Sure. Nilesh, there's a lot of people who say that, this time if the finance minister needs to do something, it is actually at the bottom of the end of the pyramid. I mean, towards rural India, towards India's health infrastructure, towards MSMEs, because that's the part which has been hurting. And while there is some tenuous link to demand from corporate demand from that aspect, generally this is not the area which the corporate sector or the stock market is very focused on. Would you agree with that? That this time's budget is probably more about not the top end of India's economy, but the bottom end?
Undoubtedly, Udayan. Today, trade, agriculture, private sector investment, and government spending is above pre-pandemic. But unfortunately and sadly, consumption is below pre-pandemic. And as you correctly mentioned, it is the bottom end of the pyramid which is being hurt maximum. We are selling more SUVs than pre-pandemic, but we are selling less entry-level bikes. Clearly, government needs to step up to support consumption at the bottom of the pyramid. They did excellent job with a credit guarantee scheme of 3 lakh crore for MSMEs. But MSME cannot survive only on fixed income or debt. They need equity. How do we mobilize equity for them? How do we create reskilling of MSME entrepreneurs so that they can move from unproductive or uncompetitive, whether it's old economy or new economy, into more competitive scenario? And most importantly, can we even think of urban Manrega? In urban India, also there is a higher level of unemployment at the bottom end of the pyramid. We have seen rural Manrega or Manrega giving rural employment. Probably there is a need for that in urban India also. So this time budget has to not only support growth, but also equitable distribution.
Rashesh, how important is all this for the purposes of the stock market or even corporate India? Because, we've seen the corporate numbers over the last 4 quarters. They seem to be on a tear. And while we are talking about these misfortunes of the MSME segment or rural India, the corporate India or the big companies seem to be actually reveling in it. They're grabbing more market share from these unorganized players, and their profit pool and their revenue pool is only growing. But is there a point where the bottom end of the pyramid actually begins to bite this kind of demand growth that we are seeing? That's the key point at which the corporate sector will notice that, no, we cannot continue to grow with 50% or 60% of India hurting so much.
Absolutely. I think, as you very correctly said, I think the stock market is a very small part and a small barometer of the overall Indian economy as a whole. And though I think what has happened last 2 years, the RBI policies on liquidity, as all over the world, all the central banks, I've always seen that any intervention by a central bank, any intervention through the monetary policy helps the formal sector and the larger corporates immediately, because that's immediate. And that is why I always say we need to balance the monetary policy with the fiscal policy. The fiscal policy, what the government does actually addresses the lower half of the economy, while what RBI does addresses the upper half of the economy. So I think the last 2 years, as all these central banks have loosened the purse strings, brought down interest rate, infused liquidity, the formal sector, the larger corporates, the larger companies have done well. And that was a good thing because it kept at least the economic wheels going. But we clearly see that consumption is slowing down in India. And as you know, consumption has been the key driver of India. So unless we revive consumption, and for that, the fiscal policies matter a lot more than monetary policy. Monetary policy works when there is a crisis like what we had in the last couple of years. But I think to revive growth and demand and eventually the capex cycle, because ultimately the corporates also will follow the consumption cycle. So we do think that the fiscal policy intervention is going to be the most important indication government can give. And it is time that government starts spending. If you look at the fiscal stimulus or so-called stimulus we have had in the last couple of years, they were also indirectly through credit guarantees and stuff like that, which all affects the formal sector. I think the direct spending by the government, there have been a few programs, but I think government needs to spend at least about 3 to 4 lakh crore putting money directly in the hands of people, which will start the consumption and the demand cycle, and that will fuel this current optimism, because this current optimism is partly based on liquidity and the monetary policy, but also partly based on expectations of growth. So if there is no consumption growth, then growth will start petering out, and that will affect all investors across the.
Nilesh, Rashesh alluded to the fiscal space for the government. I want to bring you in on this because there are only two ways the finance minister can move this time around. She can either say that tax collections have been good, buoyant, and therefore I want to get back to the path of fiscal consolidation once again. Or she could say that because there is money to be spent towards the lower end of the pyramid, she would need some more grace period, maybe another year, and she would keep the fiscal deficit relatively high. Which one would the stock market appreciate more? More fiscal elbow room or getting back to fiscal rectitude?
So the best thing which stock market will expect is that government becomes innovative. It is possible to spend money and yet not leave the path of fiscal prudence. The two options for government are to raise non-tax revenue. In divestment, we have failed every year in achieving the target, no matter what kind of market it is. I think it is time to think about divestment separately. Maybe a holding company which appoints professional managers to monetize government's holding could be a better way to do divestment. The second thing is asset monetization. We last year announced National Asset Monetization Program. Banking system is flush with liquidity. Global investors are hungry for yield. Rupee is remarkably stable. And there is appetite for domestic investors also towards higher yielding securities. So using a better innovative approach to divestment and asset monetization program, finance minister will have revenue and also ability to spend money and yet walk on the path of fiscal prudence. Undoubtedly, investors today will take a fiscal roadmap towards fiscal prudence far more enthusiastically.
Watch the full interaction on businesstoday.in and Business Today YouTube. That's where we leave it on the show today. Thanks so much for watching.